welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. Surabhi, what a day it was. Records tumbling by the wayside in the mid-caps, in the small caps and of course in the large caps. The two grand indices, Sensex and Nifty, registering fresh record intraday highs, fresh record all-time highs, and practically every sector participating. Finance, oil, commodities, just about everybody was enjoying the party, weren't they?
Absolutely, Lala. I think market participants are getting used to ending Fridays, ending the week on a pretty strong and high note. It's a great way to, I guess, usher in the weekend. Let's quickly run you through the top stories today. Once again, a fabulous Friday on Dalal Street. Markets ended fresh closing highs with the Nifty hitting 8,600 in the intraday trade. The Sensex also rallies close to 1%. Banking stocks lead the charge.
The impact of tumbling crude prices was seen across a wide section of stocks. OMCs, oil marketing companies, gained between 4 and 8%. Paint and tyre stocks, aviation company shares, all of them surged as well. However, the losses, of course, were for CAIRN India.
And in more stock-specific action, DLF secures some relief on payment of the 630 crore rupee penalty imposed by the CCI. The Supreme Court allows the real estate major to pay in installments of 75 crore rupees starting from January.
Right, that's the headlines, and here are the experts that we've lined up on the show for you. Jim Walker of Asianomics will tell us how he is reading the Indian market post the tumbling of crude prices. Market perspective also from Gautam Trivedi of Religare, Nirmal Jain and Vibhav Kapoor of ILNFS. Gaurav Mehta of Ambit Capital will also join us to tell us what levels he would watch for in the indices.
All right, before we get to that action, let's quickly run through, of course, what really happened today. What was it that sparked off this fierce rally? Well, it really began with global action, and of course we had news coming in from world's top oil-producing nations which decided not to cut output. Crude oil prices as a result fell very, very sharply, and back here at home, the bulls decided to go on a rampage. Anuj is here with details of what really transpired today. Anuj.
Well, a spectacular start to the December series, really all because of the big slide that we had in crude prices overnight by about good $5 to $6. And the market really was running on steroids after that. It cooled off from intraday highs, but really no complaints. It was still a good day for the market with new all-time highs and Nifty hitting 8,600. As you would expect, it was a lot of crude-sensitive stocks that rallied, or oil-sensitive stocks, or stocks like Asian Paints, HPCL, aviation stocks like Jet Airways. All these did well. But the sector of the day really was banking. PSU banks in particular, they are getting bolder and bolder now in terms of rate hope cuts. And today stocks like Bank of Baroda, PNB, SBI, all rallied quite a bit. On the losing side, again, there was a bit of crude impact. So stocks like CAIRN was down. You had offshore stocks like Aban Offshore that was down, but overall it was, as I said, still a good day for the market. So the sense you get is that 8,600 is here now. Can the market still continue to push on? And what happens after RBI monetary policy? That's the trigger. Till then, the market is likely to be buoyant. What happens after that? That is going to be the million-dollar question now.
Oh, absolutely, Anuj. That will be the next cue, aside from the GDP numbers, that the markets will react to on Monday. But actually today the markets got a multiple set of cues to react to. It was the crude cue was, of course, the biggest and most widespread, but it had its collateral impact on bond prices. Since bond prices surged by about 50 pies, or yields fell by some 7 basis points, you saw a spurt in a lot of these mid-cap PSU banks as well. So Bank of India, Union Bank, and even a lot of the NBFCs like LIC Housing, who depend on the wholesale market, sparked up a goodish bit. And then there was those rules for which made MFIs and NBFCs convert to a small finance bank sometime soon. So that kept hitherto slightly less important names like SE Investments on the boil, 9-10% higher. And similar moves, perhaps expectations, kept stocks like Shrey and Manappuram as well ticking higher. One doesn't know how many of them will get banking licenses or qualify. But, there were multiple reasons why several sectors were doing well. We will, of course, analyze all that in a bit. But first, let us get you some market opinion for the slightly longer term. Jim Walker of Asianomics says the Indian economy is on the verge of a recovery, and he expects the government to reach its fiscal deficit target easily. He has some very interesting and bullish views on a 3 to 5 year ahead. Let's listen in.
We're pretty well on course for the fiscal deficit target, not so much because of the falling oil price, but by the fact that the government has already eradicated subsidies on diesel. Not that there would have been subsidies anymore given the fall in prices, but those subsidies have gone. There's been progress in cutting subsidies elsewhere. And of course, I think we're now really on the cusp of an upswing in economic activity in India, which is going to help the financial position of the government anyway. With crude oil prices where they are and seeming inability for OPEC to cut supplies, then I suspect we've got more downside to the oil price, which is exceptionally good news for the Indian current account position and India generally.
Okay, so that's some opinion on all that's happening in the Indian equity space. Let's move on, of course, to the futures and options market. Now, what a way to usher in the December series. Let's ask Nigel how it's looking. Nigel?
Well, it was a stellar session in the derivatives market. It was no different because we saw big buying on the Nifty futures. The Bank Nifty futures as well saw a good amount of buying. Take a look at the open interest build up. Big buying being seen on both those two indices. But the options data, that's looking very, very encouraging. So the 8,400 put continues to get written. The premium today fell from around 55 to around 35 bucks. But the 8,500 level appears to be a near-term support for the Nifty because the 8,500 put was getting written into today's session. The premium fell from around 87 bucks to 57 rupees. And take a look at the 8,600 put. Oh, there as well we were seeing some riding. The premium of them fell from around 131 rupees to around 90 rupees. So you deduct 90 rupees premium that you'll receive if you're writing that particular strike, and a stop loss comes in at around that 8,510 odd level. Out of the money call buying, that's back in business. So 8,800 call, that's good, 200 points away from current level. The premium over there went from around 21 bucks to 40 bucks, doubling on that particular strike, while the 8,900 call as well was fairly active. The premium as well, over there as well, close to have doubled from around 10 to around 19 rupees. From individual stocks, that's all good amount of action today. SBI saw big buying. That's a big bank over there. It was up close to around 4.5 to 5% by the time we wound up. Big open interest build up as well. While a couple of smaller banks came in for a short covering bounce. So Syndicate Bank as well as IOB, both of them saw the shots getting squeezed out of the system. While Amtech Auto, first day in the trading in the F&O market, was fairly active. That stock saw big buying, while certain stocks continue to see selling. So CAIRN India as well as Idea Cellular, both of them saw selling in today's session.
Thanks a lot for that, Nigel. So brisk business in the F&O market on the first day of a new contract, the December contract. On to other news. Real estate major DLF today won a reprieve, a double reprieve if you please, from the Supreme Court. The stock surged in trade today after the company won relief in the Haryana land allotment case, and it has bought more time as well to repay the hefty penalty imposed by the Competition Commission. Ashmit Kumar, who has been tracking this case, in fact both these cases very closely, filed this report.
Right, so what we understand is that DLF has managed to secure relief in the 350-acre land allotment case. Now, just to give some perspective to our viewers, one of the main concerns that DLF had, of course, other than the primary concern of having the entire block being cancelled, the secondary concern that DLF had, which they expressed today before the Apex Court, was that there were very clear directions that the Punjab and Haryana High Court had given that this land parcel needs to be re-auctioned, which in fact had led to lack of clarity about whether or not DLF will continue to be in possession, how things will proceed from this point on. And they in fact argued quite vociferously before the Apex Court that the suspicions on which the High Court order had been based were in fact not based in fact, not based in law. And taking cognizance of these concerns that DLF today expressed, the Supreme Court looked upon these concerns favourably, and towards that end has given a stay on that part of the order which directed for re-auctions to take place. So that brings in a big amount of clarity as far as DLF is concerned, a big relief coming in. Of course, notices also have been issued in this case to the Haryana government. We'll see further action in this case as it progresses, as further hearings are conducted, but for now a certain relief coming in for DLF, no re-auctions to be conducted, so a definite stay on that and a definite relief for DLF.
Yeah, but that's not all, because there's also some reprieve as far as that 630 crore rupee penalty imposed by the competition watchdog is concerned, right? I believe they've managed to now get the Supreme Court to allow them to pay in installments. How exactly has DLF done this?
Well, DLF has been citing a number of concerns with respect to its ability to meet financial commitments by way of the SEBI order that had been passed, and that was at the crux of their argument today before the Apex Court, that the SEBI order has severely impaired their capabilities. And towards that end, they argued that they have already deposited 150 crores, which brings the balance amount payable at 480. For that, they made an impassioned plea, and the Supreme Court as well, trying to find middle ground between either paying the full amount and not paying it at all, which the DLF is seeking. Supreme Court was trying to find a via media solution, and towards that end has directed DLF to submit an undertaking that they would make monthly installment in terms of payments of the balance 480 crores, and that this procedure of payment will be on a monthly basis 75 crore rupees to be paid from beginning from 15th of Jan. So that is one solution that has definitely come in as a big relief as far as DLF is concerned. Of course, another aspect that could potentially was conspicuous by its absence were any clear directions with respect to the 9% interest component that DLF was required to pay on this entire penalty of 630 crores. So clearly, at this point, double bonanza as far as DLF is concerned, not just on the 350-acre land allotment case, but also with a monthly installment plan now in place as far as DLF is concerned. That should definitely bring in relief for the DLF shareholders. Back to you.
Right, all that did make the DLF stock tick about 0.5% higher, but such has been its woes that this relief is welcome. Let's get back to the markets then. Nifty is trading at record highs. Gautam Trivedi of Religare Capital Markets says that we are already 10 to 12 months into a 5-year structural bull market, and he believes that India stands the tallest among emerging markets. Listen in.
I think we are already 10 to 12 months into a 5-year structural bull market. That's the belief that we have at Religare. And that's the way we've been approaching and telling and advising investors. If you look at India from an emerging markets context, let's think of which other emerging market would you guys, sitting in the studio, think about it. Would you put money to work? Would you put money to work in Russia? Impossible. Would you put money to work in Brazil or Argentina at this point? Very unlikely. China, still slowing down. They just had a rate cut. Not sure if that's going to spur growth. But the fact is, again, that's a market most people are underweight on. So India stands the tallest among the emerging markets. And obviously that also reflects with our currency, which has also been one of the strongest among the EMs. Ashok Leyland has been reporting stellar numbers for its medium and heavy commercial vehicles. Now, why would anybody go and buy a 30 or a 40-ton truck if the underlying business and the economy was not starting to improve? Again, the numbers are not huge, but the fact is you've seen 3 consecutive months of Ashok Leyland posting stellar growth in their medium and heavy commercial vehicles. Ashiana Housing, they're actually with us today. It's a great story. It's the only listed pure play mid-income housing company. They have projects in cities which are tier 2 and tier 3, Bhiwadi in Rajasthan. They had Labasa, where they have actually built the first ever senior citizens home, and again a very successful model.
Well, it's been a fantastic Friday, but of course the all-important cue on Monday is going to be this GDP number that the market will be digesting as it looks forward to the policy. Ekta takes us through the details now. Ekta?
Well, the Q2 FY15 GDP was definitely a positive surprise. The total figure came in at 5.3%, which compares to an estimated 5% that the street was working with. However, slower than the 5.7% on the 10-quarter high that we clocked in Q1 FY15. Now, totally what led to that 5.3% figure, which was higher than street estimates, was because of agri. Now, agri came in at a growth of 3.2% versus estimated growth of 1.7%. The range, however, went up to a growth of around 3-odd%. Overall, agri compared to a growth of 3.8% in Q1 FY15. So it wasn't a bad performance for agri. In fact, that was one of the key reasons for that 5.3%. Industries came in line with estimates. Without construction, the figure grew at 1.2% versus 4% on a Q-on-Q basis. The likes of manufacturing, however, was subdued at 0.1%. Mining was also subdued at a growth of around 2-odd%. Services was in line with estimates. That grew at around 6.8% when you include it with construction versus 6.6% in Q1 FY15. The likes of trade, hotel and transport and communication grew better than estimates. The street was working with an upside figure of 3.5%. It came in at a growth of 3.8%. The other surprise was from community, social and personal services, which included government expenditure. It was estimated that it could have even slowed down to a figure of around 6%. The street was working with a range of 6 to 9%, and it came in in at 9.6%, which compares to 9.1% in Q1 FY15. So it was a slight uptick that we saw on a Q1Q basis, and it was much better than what the street was estimating. Overall, other parameters included CapEx, which was absolutely flat on a year-on-year basis, which was indicated by the gross fixed capital formation, as well as exports, which were quite subdued, in fact contracted 1.6% on a year-on-year basis. So overall, it was agri which led to the positive surprise of 5.3% for Q2 FY15 GDP.
Right. Thanks for that, Ekta. Well, another big trigger for the markets on Monday will be the credit policy next week on Tuesday. Gopika Gopkumar joins us now to take us through what expectations the market has, as evident in her poll. Tell us, Gopika.
Well, majority of bankers and economists polled by CNBC TV18 show that they do not expect Governor Rajan to revise the policy rates yet again. Only 5% expect a cut in rates this time. With the fall in consumer price inflation and with the crude prices falling to a 4-year low, market is certainly expecting RBI could start cutting rates earlier than previously expected. Some 50% expect the first cut to happen in February, a cut of as much as 25 to 50 basis points. But the remaining 50% do not expect a cut before the end of the financial year. But almost everyone expect that RBI will have to start cutting rates as much as 100 basis points in the next calendar year. So the bond markets will be closely watching for RBI governor's tone and guidance. 60% expect governor to soften his policy stance, in fact to be more dovish in his stance, whereas the remaining 30% expect a governor to strike a neutral tone. So this will clearly signal the beginning of the rate cuts, a possible beginning of rate cut cycle in the next year. Also, the market is expecting, a couple of market participants are certainly expecting RBI to cut SLR, or the statutory liquidity ratio. Also, there is an expectation that there will be some announcement on possible relaxation on restructuring of accounts for the banking sector. So those are the big highlights from the credit policy poll ahead of the policy next week.
All right, Gopika, thank you for that. Time for us to get into a very quick break, but coming up on the other side, lots of market opinion and also some trading ideas for next week.